Ninth problem. Balance sheet of Indian Constructions Limited as on 31st March 2015. Liabilities amount, assets amount. Coming to adjustment, evaluation of machinery reveals that it is overvalued by rupee 10,000. It is proposed to write down this asset to its true value to eliminate the deficiency in the profit and loss account and to write off goodwill and preliminary expenses by adopting the following courses. Coming to first point, forfeit the shares on which call is outstanding. In the balance sheet, you can check in the liability side, calls in arrears, rupee 3 per share on 3000 shares. Amount is 9,000. Forfeit the share means cancel the share. Coming to second point, reduce the paid up capital by 3 rupee per share, face value remaining the same. Reduce it by 3 rupee per share means the current it is rupee 7 per share. Coming to next point, reissue the forfeited shares at rupee 5 per share. Utilize the provision for tax if necessary. All the above were duly put into action. Pass necessary journal entries and draw up the balance sheet of the company after carrying out the terms of the scheme. Solution. In the books of Indian Constructions Limited journal entries, serial number, particulars, debit rupees, credit rupees. Coming to first entry, equity share capital account, debit 30,000. 3,000 into 10, amount in the debit side 30,000. Two calls in arrears account, 3,000 into 3. So in the credit side you are mentioning 9,000. Coming to next, two shares forfeited account, 21,000. The calculation part, 3,000 into 7. Being the forfeiture of 3,000 shares on which rupee 3 per share is in arrears. Coming to second entry, a total equity share amount is 1,20,000, 12,000 equity share of rupee 10 each. So 12,000 minus 3,000, 9,000 shares into 10 each means old equity share capital account debit 90,000 to new closing share capital account 9,000 into 7. So amount in the credit side you will be mentioning 63,000. So coming to here, 9,000 into 3. So you will be mentioning 27,000 in the credit side to capital redemption account. Being conversion of equity share to rupees 7 each. Before it was 10, but currently it 3 rupees has been reduced. So now it is rupees 7 per share each. Coming to next entry, bank account debit 15,000, 3,000 into 5. The reissue the forfeited share at rupee 5 per share. Coming to next, 3,000 into 2. Previously, the value per share value is 7. So, the remaining is 2. 3,000 into 2, 6,000. You can mention it as shares forfeited account in debit side 6,000. To equity share capital account in the credit side you will be mentioning 21,000. Being the reissue of 3,000 share of rupee 7 each at rupee 5 per share. Coming to next entry, shares forfeited account debit 15,000 to capital redemption account 15,000. Being transfer if balance share forfeiture account. Coming to next, capital redemption account debit 42,000. The amount which you have taken are 27,000 as well as 15,000 If you are totaling, you will be getting 42,000. Next, to profit and loss account 20,800 in the balance sheet. To goodwill 10,000 you will be taking from the balance sheet. To preliminary expenses 1,500. You can check out the amount. Goodwill 10,000. Preliminary expenses 1,500. Profit and loss account 20,800. To machinery account 10,000. The 10,000 is overvalued machinery. Note, being the losses written off and machinery reduce it. They have said that you can use provision for tax. You will be adding up all the amount 20,800, 10,000, 1,500, machinery 10,000. So if you are deducting from 42,000, there is a balancing figure, means there is a shortage. So the provision for tax account, the balancing figure in the debit side, you will be mentioning 300. Next, capital reduction account, particulars amount. To profit and loss account 20,800. To goodwill 10,000. To preliminary expenses 1,500. To machinery 10,000. You have taken this from the capital reduction account in the previous entry, means in the serial number 5. So coming to next year, buy equity share capital 27,000. Buy shares forfeited account 15,000. Buy provision for taxes 300. So if you are totaling here, it should be 42,300. If you are totaling here also, it should be 42,300. You can check it out from here. The capital reduction account 27,000. Here also in capital reduction account 15,000. Then here in the debit side, provision for tax 300. So if you are totaling this 42,000 plus 300, so it will be 42,300. You can check it out, capital redemption account. Once again, the total both the side 42,300, 42,300. So moving to balance sheet. Balance sheet of Indian Construction Limited as on March 3, 2015. A. Equity and liabilities. Note amount 3 columns. Shareholders fund, share capital, authorized capital 20,000 share of rupee 10 each, 2 lakh. Coming to next, issued and paid up capital is 12,000 share of rupees 7 each. So it will be 84,000. So coming to next, reserve and surpluses, non-current liabilities, secured loans, unsecured loans, current liabilities. In that, sundry creditors, from balance sheet you have taken 15,425. Provision for tax, in the balance sheet there is an 4,000. In the capital reduction account, for balancing figure you have used 300. 4,000 minus 300, 3,700. If you are totaling 84,000, 15,425, 3,700, you will be getting total 1,03,125. Coming to asset side, non-current assets, in that fixed asset, land and building, from balance sheet you have took 20,500. Coming to machinery, in the balance sheet 50,850. The overvalued amount is 10,000. You will be deducting that, so then you will be getting 40,850. Coming to current assets, stock 10,275. Book debits 15,000. Cash at bank 16,500. If you are totaling in the asset side, you will be getting 1,03,125. Both the side, liabilities as well as asset side, you should get 1,03,125. Once again, you can check the journal entries. This bank account has been created for the 3,000 share which is reissue the forfeited shares at rupee 5 per share. So it has been reissued 3000 into 5. The bank account debit 15,000. So the per share value is 7. So here it has issued for 5 per share. The balance is 2. 3000 into 2 shares forfeited account debit side 6,000 you are mentioning.